Everyone, this is the official how to spot bad price action and how to avoid bad price action video. Um, I know we have one from before, but this one's going to be focusing mainly on it. So we're just going to get right. We're going to just start off, yeah, right now. First off, bad price action starts off on the daily time frame. It's your typical search and destroy conditions. It's your higher time frame chop, and the higher time frame chopping can lead to your lower time frame chopping. And whenever the higher time frame chopping, that means order flow isn't being respected. And whenever order flow isn't being respected, that means strong liquidity gets a lot harder to spot because obviously if price is bullish on every time frame, but we go for a lower target in the intraday, you're going to be confused and you're not going to be on the right side of price, and that's why you lose a lot more. On top of that, it gets choppy, and certain highs and certain lows aren't respected anymore, and certain lows aren't taken, certain highs aren't taken, and and it just becomes a mess essentially, and it becomes super hard to actually have profitable trades, whether you're profitable or not. Like, people like to say that whenever you're profitable, quote unquote, or whatever people deem to be profitable, that you could trade bad price action and still come out on top. But in reality, that's just not the case. Bad price action affects everybody, okay? It affects everybody because a profitable person doesn't necessarily mean that they just know how to trade every form of price action and they're right all the time. A profitable trader is someone who has good risk management, someone knows when to enter the markets, when not to, and has a profitable system. Now, if your system's not profitable in bad price action because your system relies on higher time frame order flow, like our system does, right? Then that's when you are going to see less profitability in the markets. Now, for bottom and top tickers, it might be a little bit different because theirs just depends on levels, right? And sometimes levels aren't as affected as much as bad price action. Some levels are respected more. So whenever you see on TikTok that these guys are talking about skill issue, it's not a skill issue. Is that typically those levels just aren't as affected. And now I don't know about the win rate. I don't know any data on there and stuff like that. I mean, half those guys are unprofitable anyways, right? Out of 100 bottom and top tickers you see on TikTok, I'd like to say only maybe two of them are actually profitable, consistently profitable at that. But um, most people in bad price action just aren't winning as much. You see your favorite influencers not winning as much. That's just what it comes down to. So we're gonna explain. I'm gonna show you exactly what bad price action is and how to avoid it. So um, starting off with drawing liquidity. First of all, there's a few things that you have to understand in order to spot bad price action. And the first thing is spotting good price action. Good price action is trendy markets. Okay, that's just the simplest way of putting it. Is trending markets, right? And the reason why I consider this good price action is because certain lows are protected and certain highs are taken, right? And on a higher time frame, right? Um, let's just say this is the 1 hour, 4 hour time frame, right? If this is a bearish gap right here and it gets inverse on the 4 hour, like right here, that's how you know you can go to this next high, right? And on top of that, that's how you know that this low is protected, right? But if we are chopping on the higher time frame and we're doing something like this, you know, it's like, okay, well, this 4 hour bullish gap can get inverse. This 4 hour bullish gap can get inverse, showing us that we're bearish and that we're going for the next low right here, right? But then what do? Inverse this 4 hour gap, come a little lower, and then head back high and take out the high, right? And then boom, there goes your trade. You're stopped out. And then now you're thinking, okay, we're bullish. But then guess what we do? We come back lower, come back below this low. Now you think we're bearish, but no, we come back higher. It's chop. It's how it is on the 1 minute, 5 minute, 1 hour, and 4 hour in the daily time frame. And that's very hard to guide. So and on top of that, you don't know which lows and highs are protected in this range as well, because they're not. You know what I'm saying? delivery is terrible. Like for example, like this low was ultimately going to be taken, but guess what? We took out this high, then we took it out again, and then we finally delivered, and then we went higher. If not, we might have just gone lower. That's just how it is. All right. So, um, also understanding order flow. I've said this 1,000 times. You have to treat the higher time frame with the lower time frame. So let's just say you get a um, manipulation right here on the 1 minute chart, and then we get an inverse. Wait, hold on. Let me actually do it like this. All right. Let's just say you get a manipulation right here, maybe a SMT, right? And you get a 1 minute inverse right here. Okay, 1 minute inverse to the downside right here, right? You expect that if you're an inversion trader, right, this high is not protected because this was the manipulation high, and what confirmed it is this inverse in this change of order flow, because that's what an inversion is. It shows you the change in state of affairs of order flow, right? So therefore, this was confirmation to the downside. Instead of that break structure, you can do break structure, change of character, or whatever. But the best changes in order flow that you can see is an inversion at the end of the day. That's why it's the most popular concept, right? So now you expect this high to be protected. Now you know this low is going to get hit, and potentially this low is going to get hit as well. So if we treat the 1 minute like that, we should also treat the higher time frame like that. Now, pretend this is a 4 hour high and this is a 4 hour SMT. We get 4 hour inversion right here. Now you should understand that on the 4 hour time frame, we should come down to this low and this low. Okay. Now, when spotting bad price action, it doesn't respect those type of things. It doesn't respect it. So, I'll give you an example of good price action first, and then we'll show you the bad price action right after. Alright, so here's an example, right? We come to right here. You see how we just inverse this 4 hour gap right here. So what do you think the next target's gonna be on the 4 hour gap? Target's gonna be at least to right here, right? At least to right here. Maybe even up here, right? But for sure going to right here. That's what we do. We come back down, we rebalance the range, respect this 4 hour gap, and then come back to this high, right? Meaning there's probably a good trade in here, which we'll go look now. Okay, let's see. Come back lower, and we get an inversion right here. There we go. Obviously, it's probably not the best price action because it's the start of December, but we ultimately do end up higher. I'm 90% sure. This is the start of December, so obviously the price action was like dog shit, and we probably would have been break even right there. But yeah, we ultimately do go higher on the higher time frame now. Given that December's so fucking dog shit on the half side, right? You get stopped out, and this doesn't work, right? Of course, because December price action is absolutely terrible, whether you want to believe it or not, right? That's the general gist of it. Now, bad price action is also lack of delivery. We're gonna get into that later in the video, right? And that's a obvious sign of lack of delivery. This is this 16th, the second half of December, so obviously it was freaking terrible. But at the very least, we do end up going higher. At the very least, so it's like, okay, at least you're right about science. Now, another example of decent higher time frame price action is this. We inverse this one, right? And what do? If we treat this like the 1 minute, we're at least coming to this high, right? And at least coming to this high, and then potentially coming to this high, right? And what do? We get to it. We get to that one as well. You know, it's just your first indicator of price. So whenever I'm looking on the intraday, and here's another example, we respect this gap right here. You see how the body doesn't close above it, therefore letting you know we respect it. In bad price action, we're gonna close above it and then go back down, you know. But let you see how we, you know, don't close above it, and then we get an inversion right here on the 4-hour. And then guess what we do after that inversion on the 4-hour? We tank lower. Tank lower to the obvious lows. And that's when we got this inversion on Sunday. That Monday I told you that we are going to come down to this low and fill this in wall. I mean, that was just obvious. Now, Wednesday the 31st, last day of the year, obviously expect bad price action. So what do? We come up all the way in pre-market, and then guess what? Lack of delivery to go higher, and we come back lower. And we get terrible price action right after that. As you can see, just chop action after that. So I expected us to take out this low, rebalance, and then head higher. Because remember what I said earlier, it's so us, this right here is basically this. Oh wait, this one's actually, this is the leg. My bad, folks. This. You know what I'm saying? And then obviously this, because this is the internal. You know, this is your internal low. If I didn't really point that out, your internal low to go higher. All right, so the fact that we ultimately respected this 4-hour, even though we definitely should have been bullish. One thing I noticed about bad price action is that we will wait an extra day and have a very bearish closure and still somehow end up being bullish. As you can see, very bearish closure, and we come back all the way back above, right? Same thing here, very bearish closure right here. We inverse this entire thing, and I'm about to show you bad price action. And what do? We still end up climbing higher. We get the terrible price action of January right here. What do we do again? We come up. We take these highs out into a daily gap. This is a daily gap, by the way. It shows a daily gap on here. If you don't believe me, it's right here. This entire thing's a daily gap. And an inversion at that too. Come out, we respect it. We inverse this 4-hour. What do you expect us to do? Alright. Come down deeper into the range. At least to equilibrium with this range. At least. Right. But what do we do instead? This high should be protected, like I said. If you treat this like the 1 minute time frame, this high should be protected. The higher the time frame, the more likely it's protected. So on the 4-hour, I'm 100% expecting this to be protected. But what do we do instead? We skyrocket up. Therefore, when I was looking at this inversion, I didn't take the shorts because guess what? Where is it at? Oh, where is it at? Oh no, that was a different day I was referring to. My bad, guys. Yeah. Obviously, like, I'm expecting bearishness, and we get absolutely cooked here. Anyways, this high should have been protected at the end of the day. Another example. Alright. Now, this is your first time that we actually respected a gap here. Guess what we were doing? And this leads to our second sign of bad price action. Instead, another sign of bad price action is we're in between two potential ideas. So we have this high, this low, this high, that low, turtle soup into this 1-hour gap right here. towards looking to this 1 hour gap, and then we inverse this 1 hour bearish gap, and then coming into price. It's like, okay, it looks like on the hourly time frame we're bullish. From the hourly we're bullish. On the 4 hour, we have this 4 hour gap that we're tapping into, right? So we should respect this 4 hour gap. At the same time, like, I can definitely see us, respecting this 1 hour gap. Now, whether we respect it or not, it's irrelevant. It's the fact that that's even a scenario playing out in your head that lets you know that today is not going to be good price action, strictly because strong liquidity is not clear. When strong liquidity is not clear, it's not because you don't know what the hell you're talking about. It's mainly because price action isn't showing any clear signs of anything, right? And as you can see here, we inverse this 1 hour gap right here. And guess what? Guess what we did? We ultimately respected it and inverse this 1 hour gap. You know what I'm saying? It's like, and we have this chop action going on. All right, so just based off of that alone, it's like, dang, like, we could come up here, right here, but we could come back down to right here, and if we do come back down to right there, I'm expecting a rebalance to come back to right there, and we do get a nice 930 dump, but we get chop action right after that, like a delivery afterwards. We get a 930 dump, and then we just chop the rest of the day. And then guess what? Delivery doesn't relate anymore, because now you see a typical trade like this, you're delivering from this bullish 5-minute gap. Order flow is telling us that we're bullish here, because we leave this projection block and then we inverse this 5-minute gap, and what do we do right after that? We dump and we stop you out. It's just typical bad price action. Yeah, that's basically how I look for that price action. Is price being in a weird spot, right? So here's my example: a weird spot. We just took these lows into this gap right here, this rejection block, and we just inverse this 1 hour gap higher. We're bearish on the 4 hour. Maybe same thing here, right? So we just inverse this entire range right here. Inverse this entire range. But yeah, we re-inverse back up to go higher. Just stuff like that kind of tells you that price action is not really good. It just doesn't follow the fundamentals of ICT. And also, whenever the pairs are super, they're not correlated with each other at all. ES is staying in the same spot, ENQ is bearish, like stuff like that. Like this, for example, this day right here, we have an SMT all the way up here, like this. Here's that high. Here's this high on NQ, and then you look over here. It's like why are they 200 points apart? It's stuff like that. All right, so that's basically the video. Hope you guys enjoyed. That's how I spot bad price action. That's how I'd be able to tell you guys that bad price action is about to occur. And yeah, come later months, it's not going to be like this. So I'm not going to be trading until I see price respecting higher time frame P to raise. So